Good afternoon, everyone. Welcome to the Daily Market Update Show, where I do technical analysis on S&P 500, QQQ, and other stocks that's currently affecting the market. So today, those would be Tesla, Nvidia, Apple, and I'll be also looking at the VIX, and as well as giving you guys support and resistance levels for these stocks to play off of or potentially look into, and also what I'm currently seeing in the market, as well as what's the most likely scenario that I think going forward would be for the market. And if you learn anything from the video, feel free to like, subscribe, and they're always appreciated. All right, let's get started. So before we get into Tesla, let's take a look at VIX. So VIX is a volatility index. So the higher it is, the better it is for the bears, and the lower it is, where it's currently right now, is the better for the bulls. So we usually go back and see what the historical levels are for the VIX during these volatile times, and we can see this cluster of zone here, where it was at the lows on November 2021. We were at all-time highs for the market, and currently VIX is lower than when we were at the all-time highs. So we got to be a little bit of a caution here if we are a bull. But as of now, I'll get later again into the charts. There are no red flags on the overall S&P 500 and QQQ at the moment. But just got to be aware of all these things that's going on in the markets. So do we get a bounce back into the support for the weekly? Obviously, you got 3 days left on the week. Today's Tuesday, and you can see this month weekly support over here, this black line. We try to bounce off of it once here, 2 weeks, and then we had a couple bounces here and we dropped it back up from this higher resistance level, and now we broke that support. So I'm looking at it just this downtrending line support here, and if we do bounce in the next 3 days, this weekly candle will be back into this range. So that's what I'm looking at. If we don't, then we're going to ask ourselves, are we having a characteristic shift where we shift back to the prior CVID lows, where this range was the normal range for before it happened? So you can see this range where it was mostly down here in this range, as well as obviously we come back here once in a while. But do we come back down here and then start to trade within this range from now on? So that's going to be a question the bears got to ask, as well as the bulls. So if that happens, it's going to be good for the bulls, because we're always now in this lower range versus in this higher range. Or do we get a bounce into later this week, the next 3 days, and potentially come back up here again, and then continue to trade within this range? That's what I will be watching for the VIX closely, to see if there's going to be a characteristic shift or not in the VIX itself, and go from there. All right, let's take a look at Tesla. So yesterday I talked about us forming our very first monthly uptrend ever since all-time highs. So the monthly chart, you can see we have a nice monthly uptrend here continuing, and then we lost it here from the all-time highs. Ever since then, we never formed a monthly uptrend until over here. Wave up, wave down, wave up, and this wave up broke the prior highs for it to form a monthly uptrend. So now that's a good look for the bulls. Yesterday it pulled back a little bit, and I said I want to see more follow through from the bulls just when we formed the monthly uptrend. And I was saying that there's still 25 days left, so we potentially could get that, and we did. So today, the most near-term resistance I'll be looking at is we actually having a candle close above this double top, yesterday's high. We did get over it today, but we pretty much close on top of it. So what I want to see is a close above there, or we can potentially go sideways here to cool down a little bit, due to us running 33% already, pretty much. Actually, more than that, 44%. And although this sideways was good, so we can measure from this one, it's 33% without consolidation. We had a little bit one here. That's a daily consolidation. So right here, continuation of the daily uptrend. So I'm looking for another, let's say we get another leg up, that'll be perfect. And then when we consolidate, we are still in that zone where we previously acted as resistance, and that'll be very ideal for the bulls. More leg up, pull back, retest that prior resistance, now wanting to see a support, bounce off of that, and that would be the most ideal scenario. The other scenario for the bears is obviously we break today's low back into below 210 would be the most ideal for bears due to this zone acting as resistance. We want to see it act as strong support now. If we do break that, then we're likely looking back down here. That's the most ideal for bears. And we haven't even tested TL looking line, this 12 EMA on the daily time frame. So we gotta zoom in to see what's closer. So the 4-hour 12 EMA would be my guide. You can see it's acting as support over here. Support bounces off here, bounces off again here today. And so that's going to be our short-term guide for the 12 EMA. So if it continues and we just continues bouncing off of it, would be most ideal scenario for the bulls. And if you're bear, you want to see a candle actually close below that to even anything significant to start. You can see right here we did have one, but that was just a short drop on the daily time frame. This is no big deal there. And yeah, you can just ride the EMA if you're a bull, and if you're a bear, you're probably I wouldn't be shorting Tesla due to it just formed a monthly uptrend. There's other stocks that are a lot weaker to short than Tesla, but it's a fun name because it moves a lot. It's very volatile, so I understand why you'd want to. It's makes it's just a lot of move on both ways. So we'll see. But as of now, no signs of bears at the moment for Tesla. So we need an initial hourly downtrend for anything to even happen. And right now, everything is still in an uptrend and everything's intact. So no signs of that. If I do see signs of bears, I will definitely let you guys know. But at the moment, there isn't. And let's go to Nvidia. So Nvidia, yesterday we were talking about this wedge. On the weekend, we said there's potential 4-hour head and shoulders forming up, and now it's more like an equilibrium. So this is the left shoulder head, and this is supposed to be the right shoulder, but now it's looking more like an equilibrium, equilibrium since yesterday. And I was saying that if we do break bear, we'll probably head down to that neckline here, and we did, but there's not a lot of bear follow through if you ask me. So it's like a bear break. You can see on the hourly chart. So on the hourly bear break, boom, a lot of bear volume came in, and then that was it. There's like no, not much of a follow through. This bounce was a lot more than what the bears wanted to see. You can see from the top of the move to this bottom move, this bounce already bounced over close to 70%, right? So we want to see it bounce something that's within 50% mark for us to potentially continue up that hourly downtrend. So this is the move down, move up, hourly downtrend confirmed, move up, and want to see a continuation of that tomorrow for the bears. But this bounce is a little bit more than what we wanted, so technically we close right here. So there can still be 50-50 here. We're just right in the middle of the range. So if we do come back here, break back above here, then that's a red flag for the bears, because we just had a bear break here, and it's supposed to. The most probable scenario is us coming back down to test this neckline low of support where we bounce off of. But if we don't, then that's a good sign for the bear bulls, and then we're potentially coming back up here if we do break this cluster of resistance here. So tomorrow, this is the level I'm looking at, 390 for the bulls to reach and then break. And for the bears, I want to see us obviously break today's double bottom low and then test this 377, 376 level. Although Nvidia is a little bit weaker than QQQ today, so you can see Nvidia divided by QQQ. You can see the relative weakness today. QQQ was like flat, and Nvidia is down 1.3%. So we got to ask ourselves, if QQQ decides to pull back a little bit, let's just say 1%, right? Is Nvidia going to hold up, or are we going to start drop even more than QQQ, right? Like I say 2% instead of. So it's still relatively weaker than QQQ at the moment, just today. Yesterday was a little bit stronger. Today is a little weaker. You can see all these candles. But you can see this relative chart already broke to a downtrend, and the actual Nvidia chart hasn't quite yet. So it's a little bit relatively weaker than QQQ at the moment. And obviously, relative strength and weakness can switch right away when it breaks different technical levels. And as of now, Nvidia is on the weak side. Let's say it comes back up here tomorrow, breaks that 390, it can potentially switch back to relative strength, right? So be watching that. And Apple, after its $3,500 VR headset event yesterday, it's holding pretty well. So we had a dump from the Sell News event, and then it's like a sideways now. So tomorrow, this is the key range for me. Will Apple negate its hourly downtrend? It had an hourly downtrend pretty much, but just no follow through at all. You can see right here, big move down, bounce, and then broke to yesterday's low right there. This is where the bears want supposed to have follow through, but Ticker was a little bit exhausted from the big move, and the bulls took over. You can see came back. Now we are in the choppy. So zoom out to the 4 hours for more clarity. All right, so 4 hour big move down, and now it's just choppy sideways if you ask me. So we don't have a within the same candle high, higher low. Okay, so if we do break today's this candle's low, that's a 4 hour downtrend confirmed, because this is the higher low. Sorry, this is a lower high, meaning this high is lower than this high. So drop, bounce. Now, who's going to be able to break this range, right? If the bulls take over, break this range, then it's a 4 hour continuation of the 4 hour uptrend with no red flags, right? If the bears take over, break today's low, then that's a 4 hour downtrend confirmed for the first time. So we'll see. First time since over here. So, and after that is that 2 day weekly 12 EMA. Sorry, 2 day 12 EMA guide for me. It's as clear as it gets. Just bounces off here, bounces off here, bounces off here, bounces off here, bounces off here. So we'll see if when we come back and test that, will it bounces off here again. Absolute zero red flags on the. Other than that, this little red flag, like just initial signs of the bear. That's it. There's nothing else. We can just come back down here, 12 EMA, bounce back up again, and just nothing, no red flags. Today, EMA 12 is the clearest guy for me for Apple, and Apple obviously is going to be the biggest guy holdings in QQQ. So if Apple doesn't break down or anything anywhere, QQQ is not going to break down either, right? So you gotta make sure to keep watch on these big tech stocks, and for us to better understand where our stocks would be, because QQQ obviously going to affect SPY as well, and SPY will affect most of our stocks. And let's take a look at SPY itself. So SPY is a little bit stronger today compared to QQQ, and so essentially all the sectors are still rotating. So meaning there is still no red flags for the bulls, and there's no signs of bears anywhere at the moment due to today we can see XLF, the financial sector green, KRE, the regional sector is green, IWM was green, and you can see money rotating to smaller caps recently, just the last couple of days, and last week as well a little bit. So that's a good sign for the overall market and for breadth increasing as well. And I know it's really tempting to want to short, especially QQQ, up at these levels, and due to how overbought we are, and you just gotta be patient. So until we have a big move down with big bear volume come in, we can then scout the next move down. So just like bulls with a big move up like this, so just pretend this is the opposite. This is red candles, right? And then once it moves the other side, then potentially we can scout that move for the next move up. right? Just like a bear move down, right? And we see, okay, now we're like, all right, there's bears coming in the market. We have bear volume coming in, a big move down, big drop. And then on the bounce, this is where we start to short the lower high. And then for the next move down, right? As of now, no signs of that. You can see we just have a puny drop yesterday, and then bears can't even follow through today, right? This was supposed to be right here. This two red candle was supposed to be the part where the bears try for a hourly downtrend. Up, couldn't even get the hourly downtrend to break today's low, and we bounced into the end of the day due to bears not coming into for that downtrend. As I've been saying in most of my videos, the hourly downtrend is our guide. So if we don't have that hourly downtrend, no signs of bears, and continuation of every uptrend intact for the bulls. Daily isn't in the bulls trend. Weekly is in bulls uptrend. Monthly is in an uptrend. So do we really want to fight against every single trend until we see a sign for the bears come in, right? If you really want to short, definitely set a stop loss above prior highs. We can talk about it a little bit in the QQQ once I get the QQQ's chart, but I wouldn't be shorting SPY due to SPY is not as overbought as QQQ. So yeah, so this what is it? I talked about that golden pocket resistance as well on the monthly. You can see we're at the 0.618 and 0.65, so that's the golden pocket ratio, and those would act as resistance when we're under it. From this A to B bounce, we have a bounce close to 61.8%, and yeah, we are pretty much right there. So we'll see. Those are the level of resistance I'm looking at. If um, which coincides with yesterday's high exactly to the dot. So we want to break Friday's high for SPY first, and then we'll be looking at that Monday's high again. As of now, that's what the bulls targets are. If we do break 0.698, we are back into the golden pocket, which is this 8 to 0.65 zone. We'll see if the bulls can pull it off, but the daily consolidation is on its way because this candle was below yesterday's candle, so meaning this is daily consolidation. This one here, we'll see if how much of a pullback that's going to be. If it's just this shallow, just this tiny bit, then we move higher, just another bull flag confirming, and good sign for the bulls. The shallower it is, the better for the bulls. The steeper it is, then potentially we can scout the next move down. This move was big enough for it to scout the next move down, but bears didn't show up here, and bulls took over. So we'll see if we see something like this one, or just something that's more shallow, like this move, where it's just shallow. All right, let's get to QQQ itself. I only have 2 minutes left, so QQQ, it's same thing. This weekly time frame is in the resistance. We are in the golden pocket zone as well. You can see this 0.65, 0.618. We'll see if we can actually, well, over Monday, but we came back to it. So we'll see if QQ can get over it. This can be potentially a head and shoulders right here, left shoulder, head. So if we do come down here, then there's a potential this can become a head and shoulders. As of now, no signs of that yet. And obviously this Friday's high is going to be the first resistance. And then it's this as well. And also this 0.615 golden pocket is going to be my resistance guide. And we need to break today's low for a continuation of potential hourly downtrend. Also, same thing as my this sideways action. So if we do break today's low, then that hourly downtrend will be formed. That'll be the first step for the bears to win. All right, that's all I got for you guys. And I'll update you guys tomorrow as well. And feel free to comment below or if you have any questions. And feel free to subscribe if you made this far. And have a great rest of you guys' day.